December the 1st, 2025, 10 o'clock or 10:01 p.m. Monday night. A continuation, part 2, into looking at the indicators. Before we begin, the disclaimer. And we have to put this on here for legal reasons. I definitely should. So take a moment to read to yourself as I read out loud. And also, I'm going to give the disclaimer, but more like tell you why anyone with common sense doesn't want to be in charge of someone else's money. It can be a dangerous thing. People love to point the finger. And if anything goes wrong and the person doesn't understand and emotions can get in the way of logic, then they can be really upset, try to sue you. So everyone needs to understand, I am not a financial advisor. Nothing in this presentation is financial advice. Cryptocurrencies, stocks, bonds, ETNs, ETFs, commodities, you name it, these things can be highly volatile. Even though traders of my type love the oscillations of up and down, we love the volatility. But you should understand that you could lose all of the money you invest. You should always do your own research and consult a qualified professional or qualified licensed professional. Your investments are your sole responsibility. You should know that nothing is ever guaranteed when it comes to investing. We'll play the elaborated disclaimer at the end so you understand. Neither I nor the platforms containing this presentation for your review are liable for any losses. This video is strictly for entertainment and leaning heavily towards the educational purposes side only, looking at the indicators so that we understand better logic in jumping in and out of trades. If we're not looking at the charts, we are not learning. And let's immediately go into the chart because I'm aware of the time, 10:01. Time flies by. We did part 1. We're building off of part 1. You cannot rush this. It takes time and understanding. And put a hypothetical in. See what happens. Play with Monopoly money. I'm going to go on Robinhood and I'm going to put entry point into the price point for an asset. And remember, Robinhood holds about 19 assets as far as cryptocurrency because we like cryptocurrencies. The markets are usually open 24/7. We like that. We love it. We want more of it. So you can wake up day and night at any time and you can buy and sell crypto, which is beautiful. And Robinhood to me has a beautiful price point of only charging 0.65% of the trade. That means anytime you buy, 0.65% of what you bought goes to Robinhood. They got to take their cut. And 0.65% of the sale. Now, those numbers may or may not be up to date. That's the last time I checked. Robinhood, compared to the other platforms I use, has anyone beat? Hands down. But you should have a account with Tradingview. See part 1. Coinbase, and Uphold, as well as Robinhood. If you get these 4 accounts, Tradingview, and we looked at the tiers in part 1, Coinbase, because you can order your Coinbase debit card whereby which you can spend your cryptocurrency. Uphold, register with that platform, and register to get their Uphold debit card whereby which you can spend your cryptocurrency. All right, and Robinhood, of course. All right, let's go into more indicators. We talked about all this. Counting cadence, we're on a 3-minute chart with ZBCN. We can see the price oscillations move up and down. We can count cadence. We're about to flip to a 10-second chart. But before we do so, we're going to introduce the trend with more information. And this one is looking at right here, Percy's custom support and resistance line. Support is a floor, a foundation, and resistance is a roof over your head. The roof is good because you have protection, keeps the rain out, keeps the sun from beating on your head. But resistance means you go no higher than the roof in most cases. There's something above you. You can't go no higher than, and it's good to see that. And support means you have a foundation. You can have a platform that's not quicksand, and you can launch or jump when you have support because the ground is underneath you. So I'm going to click on this indicator and I'm going to open it up so that you can see the blue and the green lines come into fruition. When resistance is greater than support, you have no floor. You typically fall. When this is going to reverse and you have a foundation or support, the green line, dotted line, will shoot over for a foundation, and then the sky is open above so that you can move up until you hit resistance. So these lines will oscillate back and forth. Right now we can clearly see, based on cadence and being in the influence of the cat, the red triangle underneath the yellow, we're in a downtrend as indicated by the colors of the candle, every candle representing 3 minutes. We can see for at least 3, 6, 9, 12, 15, about 18 minutes or so, we've been in a downtrend with ZBCN. Really nice information. And this is encouraging to see. So I'm just going to flip through some various time frames. You're going to look at cadence, and you know what comes next after yellow, blue, after red, green. We're looking for possibly a blue to usher in the green. Remember, things go up and down, or either they trend sideways. Let's just measure this to see if we gain at least 1%. And remember, it's a faster moving chart. On higher time frames, the percentage is more generous based on the asset that you're looking at. Bottom of the red, top of the green. Remember, part 1. So let's say we get in here, then we see we get green here. Let's get in right here. And we'll get out up in here. Okay. Let's get out right here, logically. All right, so about 45 to 49 minutes, 1%. Okay. Now, keep in mind, you're on a 3-minute chart. But the 10-second chart is the same as the 3-minute chart, is the same as all the other charts. And now you have support and resistance lines. Let's go to a 5-minute chart and notice your support and resistance lines. Notice your 11-minute chart. Let's auto adjust. Resistance is less than support. So you were going down. Should we keep going down, resistance will be longer than support. But you may have a turnaround. So it just depends on what's going on here. Support is greater than resistance. So it's probably because you're in the influence of a 9 and the 21 golden cross. And within the 9 and the 21 golden cross, the cat can move zigzag left and right, but you're in that trend until the death cross comes in. All right. So support has been greater than resistance until probably the death cross is about to come in. And this right here, the 2 and the 6, can lead in the 9 and the 21, right? Because the dog is chasing the cat. The cat is chasing the mouse. If you don't know what that means, you're trying to rush things and you need a good educational foundation. Take your time. Go back. Cut this one off. Go to part 1. This is part 2. All right, so we can understand support and resistance lines as we're going through the education of these indicators. And right now, I'm gonna double click on this so that the settings can open up. And we're at a setting of 18. As far as the look back candle, look at 18, the last 18 bars. And pivot sensitivity is 3. The more sensitive the pivot sensitivity, then it's going to move rapidly with each candle. If I put this at a 2, let's see if the support and resistance lines readjust. So it's more dynamic. It's more sensitive. I don't want it to be so sensitive because I'm looking at other pieces of information in the chart. I want it to take the dog into consideration amongst other things in the chart. And watch when I go to 1. All right, that is very sensitive. And basically, as soon as the golden cross comes in, or maybe even a yellow, correction, maybe even a blue, then this is going to shoot over really quick. But sometimes you don't want to be that sensitive, even though it's nice. It's there if you want it. So we can adjust the sensitivity on this thing, right? And you can see over the long trend, looking at 10, resistance is greater than support. Why? Because it's looking for a bigger, longer trend upward, like the 50 and the 200. Let's go back to 3. And I just love that setting, 18 and 3. Okay. And we can see support is there. Resistance can easily shoot over. Let's go to other time frames. It's taking more into consideration than just the 2 and the 6. You can see, I'm going to exaggerate this just a little bit. You can see long-term support. 3 touch points is the typical rule. Now, if you start breaking that, then definitely this line is going to shoot over. And you have an upper channel as well, because we can use sort of like a level of geometry in a parallel plane. So it would seem that you're just in this little parallel channel because of the 9 and the 21 golden cross. And the death cross eventually wants to come in. The dog is zigzagging back and forth too, trying to trace the cat. Okay, but you can understand support and resistance. Let's get rid of those. And you can understand the floor having support, green, which typically can mean up, and blue in this instance seems like you're hitting the roof. Okay, you start hitting the roof and you go through the roof, support's going to come in. All right, and you can also fall through the support and resistance will come in. All right, so now we have room to the sky, but it's looking at what's going to happen here because it's taking into consideration with that 18 and the 3 setting, 3 being the sensitivity. It knows that sooner or later, after yellow comes blue, and the blue can usher in the green. So it may or may not kick in as far as flipping with resistance and support. Let's go to a 15-minute chart. And we're looking back further. We're getting more time in. Let's jump around to a 1-hour chart. Looking at the long-term trend, taking more time into consideration. Let's go to a 6-hour chart. Resistance greater than support, right? And we can see how long the trend has been going down. We can see the death cross of the 9 and the 21, the dog. And sooner or later, it could possibly be the 2 and the 6 that triggers the golden cross of the 9 and the 21. But we would like to see the smaller triangles. That lets us know it came in on faster moving charts other than the 4-hour chart. Big triangles mean it manifests on this chart. Let's go to the 1-day chart and see what we got, because sometimes you need to see the big picture. All right, so we see the big picture. Let's go to a 1-week chart. Well, look at there. Resistance and support are tied. So we need a tiebreaker. And of course, what comes after yellow? Blue. Can the blue usher in the green? It'll be time for it. But we know if blue, when it comes in, doesn't usher in the green, you get another yellow and another blue. and another yellow, and another blue, until eventually the blue does usher in the green, because after red comes green, after yellow comes blue. All right, so remember cadence. All right, so we understand support and resistance. Let's look at the 2-week chart. And resistance has probably recently shot over. We can see the pivot points of when it did. The green line was longer than the blue line. When this thing started going down, then this line came over and it was longer than the green line. And it continued, so it was time to bring in resistance again. Sooner or later, support will fly over when things turn around. Okay? The 1-month chart. Support. And we don't have enough information in this particular chart to show resistance yet. But when it comes, it will come. Right now, as far as the big trend, it's saying we still got a floor, even though it's been going down. It's not that bad if you look at the big picture as far as what's been happening yet. All right, back to the 3-minute chart. Let's add the risk adjusted momentum oscillator on top of it. And why are we adding this? Because we're counting cadence. We're seeing what is triggering what. As far as the 1 and the 3, ushering in the 2 and the 6, ushering in the 9 and the 21. And we see where we are with the 50 and the 200, knowing that we're due for a golden cross, a green, to come in sooner or later. Because remember, we're oscillating between golden crosses and death crosses. You see it here since I compressed time. The trend happening on the smaller triangles on faster moving charts other than 3 minutes until it manifests on this chart. And you can see how this death cross of the 50 and the 200, dog pound, has been chasing the dog. And it's, amongst other things, been overall pulling the markets down. And then the 50 and the 200, overall pushing the markets up. Beautiful to see on higher time frames. I mean, to see the 50 and the 200 golden cross and death cross working in concert with the death cross and golden cross of the 9 and the 21, in concert with the 2 and the 6 that was ushered in by the mouse, the 1 and the 3, is a beautiful thing. Also, to see if you're above the 21 simple moving average, the white line, or below it. Okay, and now we've added support and resistance on the time frame that you're on. Now, let's auto adjust. Let's get to the edge of the screen. All right, and we see we're current here. And as I flip to the next bar, you can see about when the next candle would print is as we look down to the bottom of the vertical line. All right, whenever it turns 10:21, here in a little bit, the next candle will print. Okay, and as you count cadence, we know that after yellow comes blue. Sooner or later will come in, and the blue can usher in the green 2 and the 6. All right, the risk adjusted momentum oscillator. Not that I'm going to leave everything on the chart, but we're talking about some interesting stuff here. All right. Green is cool. Yellow is medium. Red is hot. You have this fast moving line and you have its line of excitement. Now, let's focus on this segment here, this yellow trend in the 2 and the 6. Notice green is cooling down because red was hot. When green, or whatever color it is, begins to move below its line of excitement, it's like a precursor or a forewarning that you can have a downtrend. Also, the line of excitement is sloping down. And when green begins to warm up ever so beautifully, and when it goes above its line of excitement, well, what do you see? Is that a beautiful thing or what? Now, everything here can change. It depends on how we print. So when we go into the next time frame, which is 1024 towards the bottom of the screen, we have to see if we printed as such. A lot can happen in 3 minutes. Everything can change. But you'll get to see this little line moving up and down, pivoting, warming up, cooling off, and you're counting cadence. So you're looking at other things in the chart. You're looking at if this is crossing its line of excitement. And you can see when it turns red hot. Let's look at some history. All right, so look as it crossed up this line of excitement. That's a green candle right there, right? Truly green. And you got the 1 and the 3. And then you kept the momentum going. The 2 and the 6 got triggered. The lime green is turning yellow. It's warming up. It's turning red. The 9 and the 21 came in, was triggered by the 2 and the 6. And look at this. It went below its line of excitement, and the price didn't seriously dip yet. See that? Now, I would be looking for a decrease in the price and looking at other things in the chart, such as that 21 simple moving average, that white line, the candles were above it. But the risk adjusted momentum oscillator saying, hey, this ride might be done. It went from yellow to lime green. I mean, it turned up a little bit here because after yellow came blue, but the thrill is starting to end. The line is sloping down. The beautiful 21 simple moving average is moving up. Beautiful. We don't like when it goes down and take a trade up in there. Okay. So sometimes you have a fake out when you're below the 21 simple moving average. It can be very dangerous unless you know how to play the game. So the more indicators you have, the better. We can count cadence. We can see the green warming up a little bit from a darker green to lime. It all can change, but notice the big triangle didn't print yet. You see that? So you're still in the downtrend. As we start getting candles closer to the white line, that's a beautiful thing to see. Because when we start touching the white line, it wants to flatten out a little bit. You start landing candles above the white line, and you're usually be in the uptrend, especially if the white line is pulling up. This is the 21 simple moving average. It is your foundation by which prices can jump. Okay? And if it's way down here, your price may not jump as high. So we're always watching everything in reference to the 21 simple moving average. The risk adjusted momentum oscillator, really nice. Now with those two indicators as far as support and resistance, we're going to move to a 10-second chart. I want you to count cadence like we did in part 1. Auto adjust. And notice the support and resistance lines. You have support. Also, other things in the chart are talking. The risk adjusted momentum oscillator above its line of excitement. All right, look at it. Look at the downturn. That was a trend. It could change, but that was a trend that didn't last. What else? You are below the 21 simple moving average. You're starting to land candles on it. What comes after blue? Yellow. Can the yellow usher in the red, or will we get another blue? We're riding flat. The risk adjusted momentum oscillator, this is pointing up. We're flattening out. All right, you're counting cadence. And remember the training chart. This could be not only 10 seconds, but it can be segments of 5-minute candles, 11-minute candles, 2-hour candles, 8-hour candles. You see the trend, we're riding flat. We need for that 21 simple moving average to flatten out and start moving up. That will be a great thing. We know the yellow can usher in the red because after green comes red. Will it hold? We have to see how it prints. Starfish pattern, tug of war. Touch this line of excitement. Still moving up. Let's pull that 21 simple moving average up. Candles above it. Will we go below? Pretty long trend. You still got support. Counting cadence. Risk adjusted momentum oscillator cooking, warming up and cooling down dynamically in real time. That's a red death cross of the 2 and the 6 underneath that yellow. That's going to paint the candles from blue to yellow, indicating a downward trajectory. Death cross of the 9 and the 21 wants to come in, because after the golden cross comes the death cross. The mouse is being chased by the cat, is being chased by the dog. Where's my 50 and 200? We need help here. When the 50 and the 200 golden cross starts trying to come in again, that will be a beautiful thing. But what's going to trigger it? A golden cross of the 9 and the 21. We know the golden cross is coming next. We're looking for a really good move to the upside, and it's going to be a golden cross that ushers in the 50 and the 200 again. We need to get our trend back. Notice when we had the 50 and the 200 early warning system, the price was moving up, even though you have the dog being chased by the dog pound. The dog went one way, the 50 and the 200 was trying to catch up. The dog zigzagged another way. All right, but it's blowing price action up. When it releases, woo, that 9 and the 21 death cross is really strong. When it's there, it's not as strong. This is price action. All right, so it would be nice. We'll probably get a death cross, and hopefully the golden cross comes in. But what will trigger it? Probably the 9 and the 21 wanting to come in again. All right, so you can see the line of excitement for the risk adjusted momentum oscillator is flat. Now it's starting to move down. Ooh, will it move down? The 21 simple moving average flattened out a little bit. That's good. And it's actually moving up a little bit. And look what happened. Notice what happened. You came out of a downfall, flattened out, you started moving up, and we're still in the influence of the 9 and the 21, which is working in combination of triggering this, because it has a lingering effect. It lingers through many golden cross and death cross of the 2 and the 6 and 1 and the 3. Okay, the dog is heavier and takes longer to move and gain momentum than the cat, than the mouse. And we got dog pound on the bottom. All right, so we like to see this right here. Can we get taken out of it? Yes. All right, but that risk adjusted momentum oscillator, along with support and resistance, support still greater than resistance, is nice. Can resistance shoot over and be longer than support? Yes, but right now we have support in spite of golden cross and death cross, right? Because that 9 and the 21 golden cross is there. We're watching for the death cross to come in, and it's great to see that. And what's triggering that? This, along with this. Nice to see it still there. We're waiting for it to push up. Now, when price is riding flat like that, you're going to have an explosive break to the upside or the downside sooner or later. Notice the risk adjusted momentum oscillator. Below its line of excitement, price pulling down, but you're still flat, which is nice. It's giving you information in the chart. Now, this thing is so close. Let's auto adjust. It's so close. You can see you're above the candles a little bit on the candle. Support and resistance, but now support is still there. It's hovering really close to your 21 simple moving average. It'd be nice to get an uptrend whenever we get the large triangle here, and that lasts a little bit with the 50 and the 200. All right, so support and resistance is a confidence booster, so that when you're in situations like this, either your resistance is going to fly over or your support is going to stay there, having you look for the next uptrend, because we got the heavyweight into consideration. That golden cross has to come in. Where's my death cross? All right, so look at the death cross of the 50 and the 200. Haven't we been moving down since the death cross? Look at the 21 simple moving average. Yes, there's ups and downs, zigzags of the dog pound trying to chase the cat, but overall, down. When that golden cross comes in, It's going to be lots of zigzags, but typically you'll go up until the next death cross comes in. And things can happen dynamically. It can happen right away. Like right after the golden cross comes in, of course, you can be due for a death cross. It all depends on what's going on. Now, we like this setup. Why? Because the death cross is there and the golden cross wants to come in. Look at that support. That support has been holding true along with cadence, along with the risk adjusted momentum oscillator. And you know, since you were taken out of the 50 and the 200 golden cross support, thanks to the 9 and the 21, you know it's about to come back in again. And there it is, right across the bottom. All right. If these were slower moving charts yielding a more beautiful percentage in return, that's what we're doing. We're using indicators to let us know what's going on. Resistance is greater than support. You see that? And you're in the influence of the 2 and the 6. But what comes after yellow? Blue. Can the blue usher in the green? If it doesn't, we'll get another yellow. Either way, we're going to get a yellow. I like the trend because of the 9 and the 21 feeding off. We got support. And again, we can adjust the sensitivity of it, but it's encouraging you working with other things in the chart. Now, we talked about support and resistance lines as well as the risk adjusted momentum oscillator red hot. It has not moved below its line of excitement yet. It has not really cooled off to green at all. And we're above the 21 simple moving average. Nice. We know that the yellow can usher in the red. Will we print? We didn't. Up we go. But what comes after blue? Yellow. We're waiting on a yellow to usher in a red. Still going up higher. I got to compress it just so we can see the cadence. Will the risk adjusted momentum oscillator cool off and go below its line of excitement? Beautiful trend. Feeding off of the 9 and the 21. The dog chasing the cat. The cat, red and green, still moving left and right. All right. Now the trend may possibly be over. We're waiting on resistance to be greater than support, or you may have a healthy percentage based on the time frame that you're on. And you may say, I'm not going to be greedy. I'm out of there. If we print red, we can possibly say we're out of the trend. Resistance is greater than support. After blue comes yellow. Oh, we didn't print. Will we print here? There's the death cross. You see that? All right. So now, getting in and getting out. Notice the risk adjusted momentum oscillator. And the price didn't significantly drop yet. Can it turn around? Yes. Resistance still greater than support. And it's still going up. Whew. So, either support is going to fly over, and it just did. But you know, after blue comes yellow, and the yellow can usher in the red. There it is at the same time. All right. You understand support and resistance lines, and you understand you've been watching that risk adjustment momentum oscillator. It moved below its line of excitement, yet the price did not seriously drop. It gave you time. It was below its line of excitement here. We saw it cooling off here. And we touched the 21 simple moving average. All right. Can it still go up? Yes. But that could have been a healthy percentage. You'd be like, I'm done. Now, look at this. Golden cross is there. Just like you saw the death cross back there, and over time it went down. Golden cross of the 50 and the 200, that's the heavyweight. The dog pound is chasing the dog that's chasing the cat and the mouse. They want everything, right? But notice that beautiful trend you saw here with the 50 and the 200, along with support of the 9 and the 21. Even though you oscillated between red and green at least once or twice. Okay, so it depends on when you get out. Now, let's talk about the wind. So I'm going to take some indicators away. I'm going to take the risk adjusted momentum oscillator away. You know how to use it. If it's above its line of excitement, it's usually a good day, especially if you see it warming up. If it goes below its line of excitement, then you count cadence and you pick the best exit. And we still got some beautiful indicators. Let's talk about, we're going to try to get the most education in as best as we can. Let's take support and resistance lines away because I want you to see something really clear without interference. Let's look at the simple moving average wind channels. This is a beautiful thing we're about to look at right here. Trust what I tell you. Now notice the white line when I click on it. Okay, notice the white line. It's going to be in the midst of yellows and blues. Let's compress time a little bit. Let's auto adjust. Here it is. Oh my goodness. Oh my goodness. Let me tell you about this just a little bit. Let me tell you about it. First, let's go into settings so you can understand what's going on here. We did mention moving averages. The 2 and the 6, I'm going to flash that on and off, and you're going to notice the green is a combination of green and white. Okay? Green and white. I'm going to flash it on and off, and you're looking right by the candles here. Green disappeared. I'm going to put it back on. Green is an uptrend. White is a downtrend. There's green. Notice it's right by the candle. It's the fast mover. Now, what is the 2 and the 6 showing you? It's showing you just about when things would flip. Notice it's wide right here, gets thin, but it's still open, gets wider, now it gets thinner, and boom, right there. You know when about it's over. Now, that's the 2 and the 6. Can't really see the white. Let me move to a faster moving, a slower moving chart. Open this up. All right. White, and notice these are right by the candles, right on the candle. White is negative moving down. Green, and we do have colors overlapping, is positive moving up. And then it flips, it merges, it crisscrosses. White, notice here, it's about giving you an indication of when this bad boy, the 2 and the 6 death cross, is about to pop in. And when it gets full and then becomes narrow, it's telling you about when the golden cross of the 2 and the 6 is about to pop in. This is your trend. It's a visual. It gives you more information. You want to know when things are about to change or flip the other way. This helps you get in and out of trade. This is the wind. Green blows price up. White blows price down. Now, that's the 2 and the 6. Giving you an indication of when your red and your green is about to flip or come in. Okay? Now, into settings, and I'm going to take that off. And I'm going to take off my 13 and my 48. Notice the color. Green if it's going up, red if it's going down. Let's compress it so you can see. Green, 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 green. All right, this is good right here. All right, so my 13 and 48 is in the midst of orange bubble borders. Green is going up, even though you have colors overlapping. This green going up. Touches, green going up, but red going down. Okay? Now I want to show you, I'm going to take that 13 and 48 away. Stay focused, man. Stay focused. So the bubbles between the orange and the colors are going to disappear. Flash that on and off. See that? I'm taking the wind channels away because the wind is either blowing up on price action or down. I'm going to take away the 50 and the 200. Like what am I telling you? You get to see the lingering effects of the golden cross and the death cross. See that? So you're in the midst of a 50 and 200 golden cross channel. Okay? And you can tell its lingering effect when it comes in, okay? Because it's been blowing price up, but when it comes in, then the residual effects is it began here. You had it here, but it began here. It's a slow mover. Okay? The steering wheel is turned all the way up. And now, finally, we get to see the lingering effect of the truck beginning to turn up. Opens really wide, and then it begins to close. Okay? And we can see the influence of the death cross on price moving down of the 50 and the 200. And you can see its lingering effect. And then the death cross began here. Okay? But you can at least estimate when it is about to close, even though there's a lingering effect. I'm going to take that away because there's some things we got to talk about with this. All right, that's disappeared. Now, we only have the wind channel of the 9 and the 21 here. Okay? We talked about the 2 and the 6, the red, correction, the green, and when that's about to flip to white, letting you know when you're 2 and the 6, golden cross, that paints the candles, is going to come in or go out, golden or death. All right, so that green is helping the blue candles manifest. The white, when it flips from green to white, you know that death cross, the red, is about to come in. Is that a beautiful thing or what? Okay. Now, we're going to take the 2 and the 6 away. We're just dealing with the 9 and the 21. We're dealing with the dog. And right now, in simple layman's terms, you're looking at the cat zigzag through the motion of the dog. Let's blow this up first so we can understand it. The dog, death cross of the 9 and the 21. Lingering effect. It closes in the midst of the positive upward price action, the blue channel. And the lingering effects, it begins here. Okay? Death cross of the 9 and the 21. You can see how long it lasts. And when it's about to close or flip, fake out, right? Still open. Are we auto adjusted? Still open. And notice and get really wide. Blue here, just a little bit. I'd be like, this is going to be a weak 9 and 21 golden cross, right? So we are on the downtrend with the white line. That's the 21 simple moving average in the midst of the yellow and in the midst of the blue. That 21 simple moving average, you have some candles on it and above it, but you're in the downtrend. So your candles overall are below it. Why? Because you're in the death cross of the 50 and the 200. And you can get many dogs moving faster, zigzagging left and right, up and down. But that death cross ultimately has a lingering effect. So now I want you to notice something here. And this is a general rule. Let's move on a faster moving chart. All right. Now, can you see something with your eyes here? Minimize that. I want you to know that in the golden cross of the 9 and the 21, you can get a bump up because this is positive price action. But if you notice, before it officially closes out, you will be beneath it. You see that? You always travel down through positive. Let's say 90 to 95% in most cases in the chart. And the flip side is, officially, you always travel up through negative before it comes to an end. See that? So you got lots of fake outs here. Travel down, it didn't close, it's still open. You will have a bump up. Because we have to be beneath it before, we have to be above the negative before it closes, and we have to be beneath the positive before it closes. It didn't close here, so we knew we were going up 90 to 95% of the time. Okay? And until it officially closes, you see any blue here? Turning yellow? Yes. Look what happens before it flipped. You were beneath it. In many cases in the chart, 90 to 95% of the time, this is more information to help you make really good decisions. Down through the positive, up through the negative. Before it flipped, you were above it. All right. And down through the positive, before it flipped to yellow, you were below it. Up through the negative, before it flipped from negative to positive, you were above it. Down through the positive, up through the negative. That's a good rule that works 90 to 95% of the time. Down through the positive, up through the negative. More information, folks. More information. So if it looked like about to close out the yellow and you were beneath it, it's 90 to 95% chance before it closes you were going to shoot up above it. All right. Now, I'm going to take the 9 and the 21 away. I'm going to compress time because you can find that many places in the chart 90 to 95% of the time. It's almost like good information. Now, let's take the 9 and the 21 away. Remember, you get a bump, but down through positive, up through negative before it flips. Put the wind back on as far as the settings. Let's take the 9 and the 21 away. And let's put on the 13 and the 48, the ones outlined in orange bubbles. All right. Now, we got the 2 and the 6, the 1 and the 3, 9 and the 21, 15 and 200. 13 and 48 is just more information. Down through the positive, up through the negative before it closes. Before this closes, you will be beneath it. And I can say that with confidence 90 to 95% of the time. We're not staying up here, folks. So if this is a 5-minute chart, then I know by the time, if these converge using geometry on each other, I know by 11:05, we'll probably be beneath it, right? The same concept plays out on any time frame. When you start overlapping these moving averages on top of each other, it becomes valuable information. Because now you can see when things close or about to close, or you're about to go up or down based on if you're negative or positive. Now, don't get me wrong. Down through positive, you do catch some negative wind here, downward pressure working with this right here. But you have to have something to carry you up through the negative. That's that golden cross. So now, it holds true with the 13 and the 48. So the 9 and the 21 is going to move first, the blue and the yellow. The 13 and the 48 may move next, And then we're going to put on the 50 and the 200. Let's see if it holds true with the 50 and the 200 too. Okay. Settings, 13 and 48, holding true, 90 to 95% of the time, 15 to 200. More information. That dog is going to be really zigzagging. You mean to tell me this is holding true even with the 50 and the 200 golden cross? Yes. Yes. Now you see how all the information, cadence, left, right, left, right, left, right, yes, left, between the 1 and the 3, the 2 and the 6, and the 9 and the 21, gold cross, blue, death cross, yellow. Now you got your wind channels and you know when about you're going to be moving up. Ooh, that's about to close. Bam. Up through the negative, down through the positive. All right. It's feeding more information. That's the 50 and the 200. Lots of pivots up and down in there. Okay. Now we're going to put them all together. But I'm going to put on the 9 and the 21 first. And I like the history in here so that you can see what's going on. Let's give you more time. Give you more information. That's about enough information right there, right? We've compressed the candles so much. We got a lot of time in here. Look at the bottom of the screen. 9 o'clock a.m. through, well, shucks. Let's just measure from here to here. How much time are we looking at from right to left? 1 day, 16 hours. That's a whole lot of time. Okay. Now, let's go in logical order. Like fractions, there's no need to put the 2 and the 6 on. We know that's right by the candles. It's going to let us know when the red and the green is about to pop off. It's going to help us. I'm going to take that off. Let's put on the 9 and the 21. It's the dog. Watch the blues. Watch the yellows. Okay, that's a lot of information. Now, the 13 and the 48 overlaid. And that is some beautiful information right there, folks. That is beautiful information. Now, let's see where we are. Let's decompress time. We can see that we traveled up through the 50 and the 200 death cross. We can see that the death cross has come in. And we can see that the 13 and the 48 is green positive. The black border right here is this wind channel right here. Okay. Now, I'm going to put on my 13 and my 48. See that just came across the bottom? Because sometimes you can't truly see what's in there because colors overlap. All right. So I'd like to know if I'm in a death cross or a golden cross, because sooner or later I'll catch the wind, but then we fall down through the positive and rise up through the negative. So I got a death cross of the 13 and the 48 that triggered its coming. It wanted to come, but the golden cross came in, so it stayed open. But I see the 21 simple moving average in the midst of the 9 and the 21 golden cross. Boom, and we travel beneath it because we have to do that before it closed. And I see within the midst of a positive golden cross here that we traveled up through the negative. But if this 9 and 21 here is truly green golden before it closes, we will be beneath it. It's just a matter of if the yellow arrows come in again for downward pressure. We travel down through the positive, up through the negatives. Now, the dog moves really fast, right? But this is more information. It's a lot more information. I hope your mind is not blown by how much information you're looking at right now. Look at the 50 and the 200 golden cross opening up. Woo! That is upward price action, folks, and that happened all the way back here. Now, we're going to go to a 10-second chart. We're going to put on the risk adjusted momentum oscillator. We're going to put on support and resistance lines. And that's going to bring us to a beautiful conclusion for this hour segment here. All right. We're counting cadence. We see this channel is about to close. The death cross of the 13 and 48, orange, and the dotted orange is about to flip. Before it closes, you will be beneath it. Now, where's the blue? Blue is here. We traveled. Blue is still open. It's stubborn. Right? Still golden. Death cross of the 9 and the 21. The wind channel barely opened up. Look. Stubbornly opened up. So now you know you're going to be up through that before it closes. Is it still open? It's still open. Look, notice how I have to magnify it. There is the death cross comes in. So before this pinches to a close, this green in the midst of the orange bubbles, before it closed, you'll be beneath it because we're down through positive. And before it closes, the death cross of the 9, well, the 13 and the 48, the orange bubbles, before it closes, you'll be above it because you're down through the positives, but up through the negatives. Now, it's a lot of information, but we're looking at the wind channels. That's what we're focused on. All right. Now, look at the black. There's the black line there. I've compressed it so much. We want to see the black borders. Oh, my goodness. The 50 and the 200 golden cross is humongous. It is big. It's going to take something special to travel down all the way through that. You got great support. So before this closes out, I mean, it lets you know about how long the ride you have is. Things are relatively flat here. Look at the risk adjusted momentum oscillator. Where's my support and resistance? You barely see it. There's support, there's resistance, there's support. Support greater than resistance. In the second chart, lots of information. Now, we don't usually trade that fast, but when you're on a slower moving chart, trying to extract good percentage, you look at everything. Ooh, the risk adjustment momentum oscillator was above its line of excitement, red hot. Now it's below its line of excitement. The death cross, will it print? Will we be red? Tug of war. Held off. Now, notice the 9 and the 21. The 9 and the 21, the dog moves fastest. The dog is faster than the 13 and the 48. Before this blue channel comes to a close, you will be beneath it. But you have to see when it really closes, because that could be really thin blue there. All right, let's watch us move beneath it before it closes. Just looking at that wind channel there. And there's some other things you'll learn about it too. That white line in the midst of it, when you start landing candles in the blue and on the white line, you're going to flatten out the white line. You start landing candles below it, it's probably going to eat away at the blue for it to come to a close. I don't know how long this is going to last. Ooh, you got a golden cross of the 13 and the 48, right? So now you're all positive. Ride that ride for a little bit, but before it closes, you will be beneath the blue on the 9 and the 21 before it turns yellow. And this green right here of the 13 and the 48, before it closes, you will be beneath it. This massive green channel of the 50 and the 200, before it closes, you will be beneath it. So you're usually down through the positives, up through the negatives. It's why we love negatives. Everyone likes the ride, right? Everyone likes when things are green. Look at this. Everyone likes when things are going up. But if you want action, then you have to invest when things aren't looking so good, when prices are dropping. That's a lot of information in there. That's a beautiful trend. All right. Because we're on a 10-second chart, there's no need to measure it. But the same concept holds true on any time frame. We're going through this nicely. You're learning that as you look at the information, you are not scratching a lottery ticket here. You put the emotions aside and you learn your skill and your trade. You don't have to get in contact with anyone. You don't have to develop a customer client list or anything. All you have to do is make yourself better. This is great for introverts. I am an introvert by nature. I don't want to have to call anyone. I don't want to have to do anything. I just want to sit at my computer and work my craft. Look, you see my name, don't you? I trust myself. Trust what I tell you. I trust myself. This has come through meditation, by coveting what others have had, but they were selling it at a ridiculous price point. This is the trend. This is the flow of money in action. This is what's happening. And the whole chart should talk to you. Everything together should talk to you. All right. You're starting to eat into your green here. You see the 50 and the 200 death cross wanting to come in. And you see that the 9 and the 21, but before it closed out, that yellow, the blue closed out, you were beneath it. Before this yellow closed out, you'll be above it. Look at the death cross of the 13 and the 48. Before it closed out, you were beneath it. And keep in mind, you were beneath it here, the positive. And then the 13 and the 48 was pinching, so you know you were going to still be underneath that. It's beautiful. And you could just be in a good spot and wait for your reversal. Will we travel all the way through in one shot? Who knows? But you notice the bottom border is sloping up on the 50 and the 200 golden cross. But when you start touching that top border and eating into it, it begins to flatten out. Just like the 21 simple moving average. Nobody wants to take a trade when that white line is moving down. But I tell you what, I know before it closes, when I think it's about to close, I'll be looking at some indicators because it's like jump rope. You want to find a good entry point. Now, as the price is moving down, the risk adjusted momentum oscillator is moving up and it's above its line of excitement to stop the momentum, to try to stop it. You look at everything together. That's why I say theoretically trade, play with monopoly money and see when you think you would enter. And I still got other indicators to help you out with that. With that said and done, we're going to let the beautiful outro take us out. And the outro holds true to information in the chart. And usually I look at what's going on with the asset in the chart first. And that gives me information as to if the news is going to come out with a reason why. Don't you know volcanoes are going off all over the place right now? And people don't know this is God's sign as a promise for provision. A lot of people, no. This is God's promise for provision right here. All right. Beautiful, beautiful. Look at this flattening out. Look at the yellow. Yellow might come to a close soon as that white line begins to flatten out. We start landing candles on it, and above that white line in the yellow, we about to close, right? When you're beneath it, it can stay open. When you on the white line or in the middle of it, it can flatten out. When you're above it, it can start to close. So in order to close it, you have to be sort of above it for a little bit. It's like pulling the bottom up. And right now, since you're beneath it, you're pulling the top down. All right, coming to a pinch. Look at that. Before it closes, you will be above it. It could be a fake out. It could open more. Let's count cadence. Ooh, if the yellow brings in the red, it could open up a little more. But I see the golden cross of the night, and the 21 wants to come in. See that? Could open a little more. Why? Because you're in a downtrend. We see what happened here. Okay, that was bringing you up, closing down the channel, but it opened right back up. So we're waiting for the white line to flatten out a little bit. But we know before it closes, we'll be above it. Price is riding flat, but you see where you are. Now, this is taking information into consideration. All right, we got to close this out. We got to close it out. Let's let our outro take us out.
Your instructor of this extraordinary chart layout and information expounded upon is not a financial advisor, and nothing in this presentation is financial advice. Cryptocurrencies, ETFs, ETNs, stocks, bonds, commodities, you name it, these things can be highly volatile. You could lose all of the money you invest. You should always do your own research and consult a qualified, licensed professional. Your investments are your sole responsibility, and you should know that nothing is ever guaranteed when it comes to investing or trading. You know, an explosion can go off somewhere, a train can derail, a bank could collapse, or there could be a break in the financial system. There could be a temporary liquidity freeze. Also, somewhere in the world, war can break out in another country as we see Russia sparring with Poland. A volcano can pop its cap. A political scandal can appear out of seemingly nowhere. The Fed may not lower interest rates when expected. ETFs may or may not get approved when expected. The spread of an illness can place countries on lockdown as the world experienced this just a few years ago, and these are just a few examples that could set off markets to rapidly flip one way or another. Unexpectedly and unpredictably, so nothing is a guarantee. Your captain, nor the platforms containing this presentation for your review are liable for any losses. This video is strictly for entertainment and leaning heavily towards the educational side only. Stay objective and stay informed. Always follow the money indicated in the chart inflows many times before key events in the social, economic, and political climate forms its narrative in the news. Take the time to like, share, comment, and subscribe if you enjoyed today's content.